Ross Gerber, who leads Gerber Kawasaki Wealth and Investment Management, is sending a strong message to investors who are thinking about shorting Palantir Technologies. In one of his latest posts on the social media platform X, he told investors that betting against people who think differently or take unconventional approaches often turns out to be a terrible idea. He explained that shorting or buying put options against Palantir is a risky move, and he even brushed off Michael Burry's negative outlook toward the company. This statement marks a complete turnaround from his stance in the year 2020, when he had been one of Palantir's most vocal critics. At that time, he had labeled Palantir as one of the least ethical companies to go public since Facebook. He accused the company of helping with surveillance programs that handed private data to government and law enforcement agencies. That earlier criticism reflected widespread skepticism surrounding Palantir's business model, especially given its deep connections to defense and intelligence organizations. Fast forward to now, and Gerber's comments have taken a far more favorable tone. His updated view came shortly after a new filing with the United States Securities and Exchange Commission revealed that Michael Burry's Cyan Asset Management had made large bets against both Palantir and Nvidia. The filing disclosed that Burry's fund was holding close to $912 million worth of put options targeting Palantir's stock. This was a significant position, suggesting that Burry expects the company's share price to drop in the near term. Given his reputation for predicting the 2008 financial collapse, Burry's bearish stance immediately drew attention across the financial world. However, Palantir's co-founder and chief executive officer, Alex Karp, was not interested in staying quiet. In a recent interview with CNBC, Karp criticized Burry's short position, calling it completely irrational. He stated that it makes no sense to bet against Palantir and Nvidia, two companies that are currently leading the artificial intelligence sector and generating a strong revenue growth. Karp argued that the entire idea of shorting technology companies that build chips and ontology systems, which form the foundation of artificial intelligence infrastructure, is completely misguided. His reaction reflected his confidence in Palantir's long-term growth prospects and its ability to continue outperforming expectations. Despite Palantir reporting results that exceeded Wall Street's expectations during Q3, along with issuing a positive outlook for the remainder of the year, its stock price still dropped by 7% the following morning. Nvidia's shares also declined by nearly 2%. This showed that even strong performance reports cannot always shield a company from market volatility, especially when high-profile investors like Burry take opposing positions that attract media attention. Karp later commented that he found the behavior of short sellers outrageous, and that he looked forward to the day when their negative bets would be proven wrong. His comments reflected a broader frustration shared by many chief executives who see short selling as an unfair practice that can damage a company's public image and influence market sentiment. Ross Gerber later provided more detail about his perspective in an interview with The Information. During that conversation, he discussed the recently approved $1 trillion compensation package for Elon Musk at Tesla and explained why he tends to support bold and unconventional leaders. He said that he usually invests alongside individuals who have strong conviction in their ideas, even if those ideas appear extreme or unrealistic to others. Gerber mentioned that his decision to back Musk throughout the past decade had been highly profitable as Tesla's growth transformed his investments into significant gains. Although Gerber admitted that he does not completely agree with Elon Musk's entire vision or management style, he continues to hold Tesla shares because he sees it as a one-of-a-kind company. He mentioned that over the years, he has sold a large portion of his Tesla holdings to secure profits, but he still keeps a meaningful amount of stock because he believes there is no other company in the market that operates quite like Tesla. He described this strategy as voting with his dollars, meaning that he allocates his investments toward companies whose leadership and long-term direction he respects, even if he does not fully endorse every decision they make. When it comes to Palantir, Gerber's tone seems to reflect a similar belief. He did not issue a formal endorsement, but his recent post made it clear that he sees betting against Palantir as unwise, especially in light of the growing investor interest in artificial intelligence. As artificial intelligence technology becomes more embedded in defense, logistics, and data management, Palantir's software continues to stand out for its ability to analyze vast amounts of complex data for both government and private clients. This rising relevance has helped the company attract more investors who see it as a long-term play in the artificial intelligence ecosystem. Meanwhile, Michael Burry, the same investor who gained worldwide recognition for accurately predicting the 2008 housing market collapse, holds a starkly different opinion. In a separate post on X, Burry openly mocked Alex Karp's recent CNBC appearance. He wrote that it did not surprise him that Karp and his team could not interpret a simple 13F filing, which is a quarterly report that institutional investment managers are required to file with the United States Securities and Exchange Commission to disclose their holdings. Burry went on to argue that a fundamental rule in both philosophy and data science is recognizing when the available information is incomplete. He suggested that when an analyst or company does not have enough data, it is better to acknowledge that uncertainty rather than pretending to have all the answers. In simpler terms, Burry was saying that Palantir's management should not act overconfident about their market insights if they are missing important details about broader financial trends. His criticism implied that overconfidence in technology and data can sometimes lead to misjudgments, even for companies that specialize in analytics. This back-and-forth exchange between Burry, Karp, and Gerber has highlighted the growing tension between traditional investors who rely on value-based analysis and those who believe in long-term technological innovation. Gerber and Karp seem to share a confidence that Palantir's strength in artificial intelligence, government contracts, and data analytics will eventually reward patient investors. On the other hand, Burry's skepticism reflects a more cautious outlook that questions whether current artificial intelligence valuations have become overly inflated. It is important to remember that Palantir's story has always been polarizing. Founded in the early 2000s, the company built its reputation by working closely with government agencies on national security and intelligence projects. Over time, it expanded into the private sector, offering data solutions for industries like healthcare, energy, and finance. Despite this evolution, Palantir still carries the perception of being a government-aligned company, which some investors view as both a strength and a weakness. Those who admire the company see its long-standing government relationships as proof of reliability, while critics argue that this dependence limits its flexibility in commercial markets. This ongoing transformation is one reason why investors like Ross Gerber see shorting Palantir as a dangerous move. In his eyes, betting against companies that operate at the center of new technological revolutions can backfire badly, especially when those companies already have a track record of resilience and strong leadership. Whether Michael Burry's thesis will turn out to be accurate or not remains uncertain. However, what is clear is that this debate reflects a larger question facing investors today. Should they trust proven innovators who are shaping the artificial intelligence landscape, or should they side with skeptics who believe the market has become overheated? Regardless of which side ultimately proves correct, the discussion around Palantir continues to demonstrate how emotion, conviction, and perception all play powerful roles in financial markets. For now, Ross Gerber and Alex Karp appear to stand on the same side of this argument. Both men agree that shorting Palantir is a risky bet, especially at a time when artificial intelligence adoption is accelerating across industries and global institutions are increasingly relying on Palantir's technology for mission-critical operations. Investors will be watching closely to see whether Burry's caution or Karp's confidence wins out in the months ahead. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.